If you really listen and I master what I'm about to say today, what we're about to do in today's video, you'll be able to avoid most of the unnecessary tricks that the market plays on you and focus on extremely high probability setups only. In today's video, I'll be taking you through a simple technique I use to spot directional changes in the market. This technique allows me to know when exactly the market is about to change direction. It allows me to maximize my trade potential on any single opportunity I find on the market. I'll explain to you how I took this trade, how I found my entries, how I was able to hold that trade for as long as I was able to hold it, and then milk as much as I made from this particular trading opportunity. If you're able to take advantage of opportunities like this, most of the unnecessary losses, most of the fake outs, most of the stop loss you hit, you realize that you have to relax and then take advantage of this particular trading opportunity, because a lot of traders do not know exactly when the market is about to change direction. They do not understand when a particular trend changes. So today I'll be taking you through exactly what to look out for when you're expecting a particular trend to change, be it an uptrend or a downtrend. Without wasting my time, let's get right into it. If I remember, I made a video where I talked about the various trading techniques I use. One of the most important videos I have actually shot on YouTube. So if you haven't watched that video yet, the link to that video will be shared at the end of this video. So today we're doing another episode of reversals, how to know the market is about to change direction. So if you look at this chart I have here on Euro NZD, this was a trade I took last week, made over 200 pips on this particular trading setup. It's still moving. I still have my swing position on it, still running. For about 2 months, this particular Euro NZD chart has been on a downtrend. So they'll take you to one of the most important things to look out for when you're expecting the market to change direction. Let me draw a simple trend of the market. Let me draw, let's say, an uptrend where we have, an uptrend is basically where we have higher highs and then higher lows. So higher low, higher high, higher low, higher high, higher low. If we expect this particular trend to change direction, there's a few things we look out for. One of the most important ones is what I'll take you through today. One of the most important ones we always want to see is a double top. So if we see a double top, we are mostly expecting the market to change direction and then change to become a downtrend, giving you what? Lower highs and then lower lows. And then on the flip side, you can also have a scenario where the market has actually also been on a downtrend. On a downtrend means that it's also giving you lower highs and then lower lows. Lower highs and then lower lows. So we have it all the way down. It can be as long as possible. You do not assume the market is about to change direction with just your instincts. So if I'm also expecting this downtrend to also flip or change direction, what I want to see is basically a double bottom. So if I see a double bottom, I'm expecting this trend to change and then become an uptrend, giving me what we call higher highs and then higher lows. So if you look at this setup, we realize that this is where I actually identify directional change in the market, where I spot a double bottom like this. If you expect an uptrend to change, you want to see a double top. If you expect a downtrend to change, you want to see a double bottom. I'm sure you've seen a lot of videos or taken a lot of lessons on chart patterns where you are told to just sell when you see a certain pattern. Where those patterns are formed is actually more relevant than what pattern you see. So because the pattern formed at the end of a downtrend, we expect reversal on this particular trading setup. So what does it mean? It means that we are trying to find an entry on this particular end of the trade. So now let's go back to our Euro NZD trade. We want to see how far our downtrend will go before it actually changes direction or actually reverses. So all the way from up here, like I said, been on a downtrend since August. It continued all the way down, then it started reversing at this particular price point. It started reversing at the bottom here. So let's mark this point as our reference point for the reversal and see if the market is actually going to tap back into that zone again. So now you realize that the market was now approaching our support. It hits our support. But what do we want next? We want to find an entry. We want to see if we can actually find an entry on this particular trading setup. When the market tapped into this our support again, we're expecting to find an entry and then take a trade basically here. So I actually found an entry here initially. This took a trade here initially with my stop loss right at the bottom of this particular range. I expected market to travel all the way to tap into this zone. It was my TP1. At least what I am risking on this trading setup should be my TP1, my TP2 as well. Okay. My final take profit here if I'm expecting the market to actually travel that far. So now what do? We simply wait to see if the market will tap into any of our levels. So initially, first instance, now the market actually hits my TP1. Let's look at what happened right after the market hit my TP1. So the market hit my TP1. I had my stop loss at entry, expecting the market to keep going further. Then let's look at what happened. It actually reversed on me and then it took me out at entry. So I remember what I said in the beginning when I explained what to look out for when you expect the market to change direction, that you want to see what a double bottom. So we realized that this double bottom also, we expected it to also form right along the same support zone, the same places where we expected to see our double bottom. So now we come here, we identify that we have some sort of double bottom forming in here, because now we are expecting this whole downtrend to change direction as a result of the double bottom we are spotting or seeing here. So now we've marked out our double bottom. We want to see what the market will do after this double bottom. Because of how much this particular pair moves, I also do what we call multi-time frame analysis. Multi-time frame analysis simply means using more than one time frame to find an entry on a trade, or using more than one time frame to analyze the chart, find an entry, and then take your trade. So now, what did I also do? I simply just switched to the 1 hour to also see what was happening on the 1 hour. On the 1 hour, what did I also have? I had another morning star forming, and then the market came back down to tap into that zone. So what was the trick? Expect another double bottom to also happen on the 1 hour. So you realize that here initially the market tapped into this zone, went up, came back down, and then it's forming a double bottom here. So the trick was, now I expected the same thing to also replicate itself on the 1 hour. So now I also wanted to find another confirmation here to see if this candle would have given me any bullish confirmation. So next candle after that gives us another strong bullish candle, which closes, giving us this sort of tweezer we have here. I was on a lower time frame, so I always want extra confirmation to be sure the market is moving in that particular direction. I waited for the next candle to close. So like we always say, experienced traders spend much more time waiting than trading. You actually want to jump in on the market when you're expecting it to move in your direction, so you don't have to waste too much time on drawdowns, stressing for the market to go in your direction or not. So now I had my strong bullish candle close here, confirming to me that now I'm expecting the market to also go up. There was another way I actually found my entry with the confirmation I got here with the tool we call Fibonacci. Look at how much I waited to actually get my entry, because I didn't want to go through the stress of maneuvering my way through drawdowns and all that. So now, risk to reward, buy position here. Where is my stop loss? Stop loss was right at the bottom of this wick. So our next candle, strongly bullish, gives us 30 pips on this trading setup. Next candle goes up, tap into this particular zone, already made us about 40 pips on this setup. So you realize that I just stayed on the 1 hour fan because the 4 hour candle hadn't closed yet. So there was no need for me to be wasting my time on there, because I only want to go back to the 4 hour if it closes. So now we've already smashed our TP1 because it's exactly how much we risk on our stop loss. So we've already made 1:1 on this trade. Our TP1, which was exactly how much we risk as our stop loss, we've already made it on our 1 hour. We simply now switch to the 4 hour to see how the market is looking. Now let's expand our risk to reward, expand our take profits. So now we've already made our TP1 on this trading setup. So you realize that now our entry in the 4 hour, our entry was actually here. But I'm waiting for closures in the 4 hour, and I realize that it might be too long, the market might go too far away, and I will not be able to take advantage of that trade. I simply just include the 1 hour in my analysis, try to find a better entry on the 1 hour, a tighter stop loss. Then I can also combine with the 4 hour and then watch both of them concurrently to see how to hold my trades, whether to close them quickly as day trades or to hold them as swing positions. So we simply just now hold our trades because we have a clear double bottom form on the 4 hour. We're also in a significant profits of more than 40 pips. We've already taken profits at TP1 now. Final TP obviously here. Let's place our second take profit actually here because of the consolidation we had here. So TP1 already smashed, TP2, TP3. Now what do? We simply just wait for the market to react to our levels. So you see we actually hit our TP2. Like I always say, my stop loss is at my entry price. Now I'm expecting to hold it all the way up. So it gets to my TP2. I also close out my positions on my TP2. Then I actually hold the final profit to also see if it will get to my TP3. What do you also see? The final profit also gets to my TP3. So this was actually on Friday. I left about 5% of my positions running over the weekend to see how far the market was actually going to go. So now we are currently all the way up here now. So what did I say from the beginning? If the market travels in a particular direction for a very long time, be it an uptrend or a downtrend, the way you're able to identify this trend is about to change direction is by it forming double tops and then double bottoms. So this is how you apply your double tops. Don't just trade double tops and double bottoms randomly. So you realize I was actually looking out for a simple chart pattern. But what did I also do? I combined it with market structure. I also combined it with my candlestick confirmations, and I also watched both time frames to find precise entries minimizing the risk I would have taken on this trade, because if I stick to my 4 hour, I still could have taken this trade. I still would have taken this trade and I made money, but I'd have to have waited for the closure of the 4 hour candle. So closure of the 4 hour candle means that I would have risked about 70 pips on this trading setup. It's now that I'm holding this small swing position, all I need to do is to just keep adjusting my stop loss into profits as the market keeps going, to see how far I can actually milk this simple trading opportunity. If you like what you just watched in this video today, make sure you like this video. It's extremely important you like this video and help a lot with the YouTube algorithm. Also make sure you're subscribed, hit the notification bell so you get notified anytime I go live, I drop a video on YouTube. Also click on the link in my description to join my common forex trading community. Also click on the link in my description to also sign up with my recommended broker if you're new to trading and you are looking for an extremely trusted and a reliable broker to trade with the tightest spreads, 24-hour customer service, also instant deposits and withdrawals. There's a link in my description which takes you to the website of my recommended broker, where you also be helped to set up your trading account. If you want to reach out to me, ask me any questions you want, you need help with setting up your account, you need any personal assistance, just click on the link in my description to join my trading community, and you have access to my handle in my trading community. Also keep up with me on my socials: Common Forex on Instagram, Common Forex on Twitter, Common Forex on TikTok, Common Forex on Telegram. We recently just hit 4,000 subscribers over the weekend, less than 2 months on creating this YouTube channel. I'd like to express my heartfelt and sincere gratitude to each and every one of you for subscribing to my channel, for liking my videos, for commenting below my videos, also for sharing my videos, for hitting that notification bell. Keep doing that and we'll keep growing as much as possible. Next target is 5,000 subscribers. We are growing as hard as possible. Trust me, more amazing educational trading content coming your way. Thank you very much for watching this one. See you in the next one.